So, hello and welcome to my first live on this YouTube channel. My name is Christian Rauchenwald, and today I'm basically going to use Elliott Waves, teach you a little bit about Elliott Waves, and also apply Elliott Waves to GameStop to predict where the short squeeze is going. Now, unfortunately, my MacBook doesn't do what it should do, so let's see if we can get that working so I can also share my screen with you guys. And I do hope the audio is fine, because I usually just use the setup for recording. And okay, louder please, we already hear that. Might take a second to get that figured out. Gonna add an audio gain. Let's say plus 10 dB. I hope it's not too bad. Okay, now it should get louder. Also, I think this way it should be fine. Okay, great. So just waiting for my MacBook to boot up, and hopefully screen sharing works already. Studio mode. Don't need that anymore since the audio is not working. And where was it? Game capture. Yep, looks like we're good to go. And just gonna push a magic button here and you guys can see my screen, I guess. And just gonna get started. Now, I wrote a post on Reddit. I guess that's the reason why a few of you already are here. Need to mute the video in the background. And let's see if we can find that post. And I actually recorded a video and updated one 2 days ago, and it was like 1.5 hours about Elliott Waves, about how they apply in short squeezes and all that stuff. And then when I started cutting the video, I noticed that I made 2 very crucial mistakes during the first 5 minutes, and I had to delete the whole file because it basically became worthless. So here we have the original post. Don't need Facebook, so I'm gonna leave that. And the original prediction was that it's going to be beyond $10,000. Now I'm gonna try to cover some Elliott Waves basics here, but obviously, as I mentioned in the post, you can also just grab the book. Yeah, so you can read it for free online. A link is in the description down below, or you can order the physical copy. And I'm actually, before we jump into GameStop, I'd like to use Tesla as an example because that stock also was shorted a lot and so on. And basically with Elliott Waves, it's kind of like you always have your 5-wave pattern, so your impulsive wave. But the bigger question is, because one wave can be part of another wave, what's like the bigger wave you're currently in? Because you could have a wave that goes upwards, so that currently the price moves upwards, but if you then if you zoom out, you suddenly realize that the overall trend is actually downwards. So it's kind of like the hard part to look at history. By the way, there's also another link in the description down below to an Elliott Wave cheat sheet. I'm gonna switch to the camera so you guys can see that better, or I hope you can see that better. And I'm gonna need to scale some windows here so I can actually see things better. But I'm also using the cheat sheet, and it's quite nice because it explains the impulsive wave patterns and all the corrective wave patterns. And if you look close enough, like this way, then you also see, although the camera is not sharp right now, but you see that here, a wave 2 to 3 always is another impulse wave. Yeah? And a wave 1 could be an impulse or a leading diagonal. So you can also download that one sheet here, especially in the beginning when you're learning about Elliott Waves. That's like really an amazing cheat sheet to help you out and understand the patterns. And also especially when you then look at what's the bigger wave and so on. Now I'm quickly arranging one more window so I can see the chat. Yeah, David, congrats on already ordering the copy. And yeah, and we're gonna go back to the screen. And yeah, in case the camera is covering something, please let me know because I might not notice it all the time. But yeah, with that we're at Tesla, and we're just gonna zoom out and look at the monthly chart. And you can see if I just look at the chart regularly, it's hard to spot any wave patterns. However, for the last 2 years actually, we can easily spot a wave pattern here. We could just have it here, shortcuts. We could just say, okay, from here to here we have our wave 1, wave 2, wave 3, wave 4 since that point is lower, and our wave 5, which means that right now on the monthly chart of Tesla, we're actually looking at an A-B or at a corrective pattern. Now I mentioned in the post, I think I mentioned it, that there are multiple corrective patterns. I'm really bad at corrective patterns, so identifying which one it is precisely, but that's not crucial. What we know, it is a corrective pattern, and most often it would be an ABC zigzag. So for Tesla right now, it could go something like this. So like A, B, and now we would have point C could already be this low, or it could go further below, yeah? And so Elliott Waves here help really nicely to predict the overall pattern and way we are going. And I think one of the really nice aspects is if you consider then the cheat sheet and we assume that this actually is going to be a zigzag, again there are other corrective patterns, then you can look up the zigzag and you will see that wave C, so from B to C, will always be either an impulse or an ending diagonal again, yeah? And you can also see on the top, so I'm again switching, so hopefully you guys can notice it. So when we look at the zigzag, we see that here wave B to C is an impulse or an ending diagonal. And if you look at the numbers above, you see that for wave C, in 82% of cases, it's an impulse, and only in 18% it's an ending diagonal. So you also on this cheat sheet have the percentages, how likely it is that it is a specific pattern, making it easier for you to figure out what kind of pattern you are looking for or what is likely in that situation, and so on. Now, again, in the beginning, I wanted to just cover some basics and also show you some tricks that make it easy to spot Elliott wave patterns. And as you can see on Tesla, even if we don't look at the logarithmic chart, you can easily spot a 5-wave pattern here in the end. If we zoom out further, it becomes a little bit more challenging, and that's one mistake that I made in the video that I then didn't publish, because while we can easily or more or less easily figure out a 5-wave pattern, like for example 1, 2, 3, 4, and then we would have to assume that this here is 5. I'm not sure about this corrective pattern, especially because it gets higher here. So that's a part where I'm personally struggling with Tesla. But the overall idea is that no matter which chart you're looking at, you'll always be able to find Elliott wave patterns in there, unless the price is manipulated or fixed by the government, for example, or because buying restrictions come into place. Yeah. Now, as to the accuracy of Elliott waves, we're going to switch from TradingView, where I can manually draw my waves and so on, to a service that I'm using called Wavebasis. And I need to log in, apparently. And I also will need to unlock my password manager. There we go. And log in. And Wavebasis basically uses computer algorithms to predict or to try to apply Elliott wave patterns. They are not doing it 100% accurate, but they're doing a fairly good job at it, and it saves a lot of time. You can test it for 2 weeks for free, and after that you need to pay at least $50 per month to use it. And here I also want to quickly show one example based on Tesla, and we're also going to switch on the monthly chart. Now, usually when you have the IPO of a stock, you kind of like, or very often you look at a slight increase followed by a drop. And the reason for that is that very often a company would go public at the height of the 5th wave, when they are overhyped and when there is a lot of publicity and a lot of demand for that company. So with GameStop, we see that when we then look at the monthly GameStop chart in a second. However, with Tesla, it actually goes quite straightforward. They went public and it keeps going up. And now the interesting thing here about Wavebasis that I want to cover is, first of all, they have this auto wave count, so I can just push a button and it will try to apply a wave pattern. And as you can see, it does it like this. So, and I need to zoom a little bit out. And we see that it has like the bigger wave would be here. So it would say like, this is our wave 1 overall. And in that wave 1, we see an ABC corrective pattern, which again would confirm that before the IPO, we were at the end of a 5th wave that we don't know about. Yeah? But the real interesting aspect that I think I wanted to show from here, it was, I think, on this chart. Yeah, yep, that's it. Yeah. So, and wave 3 would be this one. Yep. So I'm going to clear that chart because now everything was automatically labeled. And so it's kind of like hard to believe what I'm going to show you. And we're just going to pick the 5-wave pattern. And I'm going to start from here and say from here to here is our wave 1. And now I'm going to press escape because we won't label the rest yet. And the moment I do this, I can hover here and we can see our price target for wave 2. And surprisingly enough, that price target actually matches the low points that we reached. And only briefly here, the price went actually lower than that. Yeah, now I can project the pattern forward and it would basically label out all 5 waves. And I can then just map it here and or where wave 2 was ending here. And we basically see that for wave 3, it would have predicted somewhere in this area, although here it suddenly went way higher, which obviously would have been wrong. And that's a point that I wanted to share today, first of all, to show how accurate Elliott wave patterns are. And second of all, to also make it clear that just because they're accurate, if you now try to use them on GameStop and you think you're going to trade the swings, you're likely going to miss the huge upside jump that we're going to see, because if we would have followed Elliott Waves back in, 2011, and we would have set a profit target at $13, we would have sold here and missed all that movement upwards. Yeah. So Elliott Waves are fairly accurate, and the price targets, as we saw here, wave 1 predicts automatically this area here, fairly accurate. Wave 3, not as accurate, and once we label wave 3, so we have a top here, we can, and I need to move the other ones forward, up, so that it makes sense in terms of time. But we see that for wave 4, it also predicted the right area. It doesn't get the price perfectly right, so it doesn't tell you, okay, it's going to be exactly whatever, $23, but you see an area and we see that the price clearly falls into that area. And when we then pick wave 4 here, so we label it properly, we can see the wave 5 profit target also matches. Yeah, it touches the area here and then eventually reaches it here. So that's why I love Elliott Waves, because it doesn't only, if you use indicators like, I don't know, moving averages, RSI and all that stuff, all of that information is lacking behind because you need more new candles for the information to update. So if you have an average over the last 200 candles, a lot can happen for that average to start moving. So you're always lacking behind a little bit. Those indicators, in my opinion, are great as additional confirmation and stuff like that. But if you then compare that with Elliott Waves, you actually have a tool at your disposal that tells you with an incredible accuracy where the market is going and at which price points you have to expect, I don't know, the bull trend to end, for example, or the next correction. So yeah, that's what I wanted to share about Tesla, because that part here was quite nice with Tesla to show the accuracy of those Elliott Waves. Now, as we see, David already mentioned now 2 or 3 minutes ago, that I predicted the 150 range low. I actually expect once we have market open today that somehow the price will drop further to close that stupid gap at 140, and then we will go up from there. It could even go below 140 because we all know there's a lot of manipulations with GameStop, but that manipulation also happened in other stocks, maybe not to that extent. So like Tesla had short squeezes, but obviously no buying restrictions and so on. And so it's kind of like we're in, what's the right word, unprecedented, or yeah, like unprecedented territory, something like that. In case you haven't noticed, English is not my native language. And so, yeah. But overall, we already know now from the first couple of minutes of this live, or 15 minutes already, time just flies, that Elliott Waves are fairly accurate, and unlike other indicators that you can use, they do not lag behind. You don't need new candles all the time to confirm what's the next move going to be. Sometimes you, for example, if you're at the end of a 5th wave, I'm gonna switch real quick. So if you're at the end of a 5th wave, of course, you don't know what kind of corrective pattern it will be. If it will be a zigzag or, I don't know, a triple free, triple zigzag or whatever, but you know there will be a correction, yeah? And then you need a couple of candlesticks on the chart to figure out which of those corrective patterns it will be. But overall, you already know in advance there will be a correction. You don't have to, okay, if it crosses the moving average and confirms and whatever, then I will sell, but you already know in advance that's the area where you have to expect a correction. Now, with that, we're actually going to jump to GameStop, the reason why all of you are here, GME. Also, remind me, please, if I forget to switch between screens. It's like something I used to do a little bit Twitch streaming in the past, and it happens that I'm talking about my screen without sharing it, which is kind of like bad. And yeah, so now we're looking at GameStop, we're at the monthly chart, and yeah. That's exactly what I meant before. Usually an IPO happens around wave 5 and is followed by a correction. So we cannot label this area here because it's likely wave 5, and that may be the A, B, or actually A, B, C, don't know, hard to say, but we can start labeling it from here. Another tool that Wavebasis has, because it always tries, when you use the auto prediction, you see that small dot down here in April, it basically picks the lowest point it can find, because usually, or the highest point it can find, because that's usually where a new wave starts and starts to predict from there. So if I would auto predict, it would only label that last couple of candles here for the last few months since April last year. But I can also just use the other tool here, that square, and basically mark an area. So for example, this area here, let's say till here. It will also label it automatically, and it would say that this is our wave 1. Or actually, it would assume that this is 0, 1, 2, and 3 would go down. So that's definitely wrong here, because it would mean that GameStop should have gone broke here already. And we can see the 1, 2, 3, 4, 5, and we can again see the accuracy of the... yeah, that's what I meant. Thanks for pointing it out. Gonna move the camera here. Yeah, but there you go. That's the April. And so we can again see the accuracy of the price points, although it didn't reach all the way down here. So the wave number 2 didn't go all the way down. And our wave number 3 didn't come all the way up here, but it ended here. And then our wave number 4 is fairly accurate again. And our wave number 5, if I pick the right here, also went a little bit further than it was supposed to. Yeah. So that's what we're looking at here. I'm going to remove that. We're going to manually label that as good as we can. It's a little bit tricky because there are a few violations that we run into when we label it like this. So if we start our wave 1 here and say this here is our wave 1, I'm going to press escape, then we see the prediction for wave 2 would be to go down here. And it actually held for some time, but then eventually we had this whole movement down here, which makes it tricky. Now we're going to project that forward, because wave 2 actually would be down here, and that's the first rule violation that we would have to make, because wave 2 retraces further than wave 0 or wave 1. Yeah, and the problem with that is that because we are looking at it from the IPO, I'm not 100% certain if it's okay or not. Yeah, so that's a point I'm not 100% certain, but it's also a crucial aspect, because if it's okay like this, it would mean that, if I scale that again a little bit and we move wave 4, that this here was our wave 3. And then because of the buying restrictions, our wave 4 went all the way down to here. So it was predicted to only go to around 250, but we went down to, no, get sticky there. Yeah. Might have to, oh, now it is. So, but it went down way further. And as a result, the wave 5 prediction is also totally off. Yeah. So again, assuming that this violation here is okay, because we are looking at it from the IPO, then the wave pattern would look like this. The second violation that we have is that our wave 4 retraces into the area of wave 1, and that violation is okay because it didn't happen based on natural market behavior, but because there were restrictions placed on the stock and people could only sell if they lacked the, I don't know, confidence to hold or the diamond hands to hold, yeah? Sorry. And so if that's accurate, it would mean that we're currently in the 5th wave. So, and we can use our cheat sheet and we can check the 5th wave can be an ending diagonal or another impulse. So if we look up here, we can basically say, okay, from here on out, so from the low that we had after the buying restrictions, it should be another impulse or an ending diagonal. However, if that violation here is not okay, then theoretically, our wave 1, and I'm going to start changing the wave degree, let's say intermediate, and then theoretically it could be that this here is our wave 1, but that would mean that theoretically we would also have to have another impulse wave all the way here, or an leading diagonal, yeah? And both are not the case here. So I rather stick with the labeling from here, although there are 2 rule violations in there. One I'm okay with because it didn't happen based on natural behavior, and one based on, yeah, like short sellers trying to drive the stock into bankruptcy last year already. And where I'm only willing to ignore it because we started from the IPO. So for me personally, I believe that we're currently in the 5th wave here, which again can be an impulse or an ending diagonal. And with that, we can basically move further, and we're going to leave this here open, and we're going to open the second chart here, and here we switch to the hourly chart. And just going to make sure that everything's empty. And why did we look at the monthly chart? Because it helps us confirm our starting point. So we know, even if, I'm going to also lock in the wave lines here. So even if that here is wrong, parts of it because of the rule violations, we know with certainty that a new wave starts at this low point in April. So we can definitely, even if what we did before here would be inaccurate or wrong, we know that we can start a new wave from here. And that's important, and we know that this wave from here, assuming our labeling is correct, would be a 3rd wave and therefore an impulse wave. And so we can go back to the hourly chart, and I'll have to zoom out a little bit and also scroll back. Here we have the low in April, and I'm just going to let wave bases do their magic. And I'm also quickly going to change the color of our disclaimer, because obviously everything I'm saying here is just my opinion. Yeah? Don't go and, I don't know, take out a loan and buy because I'm saying it will go up. On the 4-hour chart, starting with February 21, why would you specifically want to use the 4-hour chart? Like, I mean, we can definitely take a look, but I'm going to finish with the hourly chart first, and then we can see how it looks on different charts. Yeah. So it automatically labels it, and it basically tells us that here is our wave 1 coming from here, and our wave 2 is here. Now, however, based on our monthly chart, we actually assume that this would be our wave 3, wave 4, and that we're now in the 5th wave. Yeah. The smaller waves that are labeled here work out because they are parts of those waves, so we don't have to worry about that. But basically what we can do, we can delete this one here. Delete pattern, yeah. Now, that brings us to one part where wave basis is not so accurate. So if you now think you're just going to sign up for wave basis and you're going to auto label each chart and you're going to be rich tomorrow, that's not going to work. You're going to have to put in some effort and learn at least basics about Elliott waves, because as we see here, the 1, 2, 3, 4, 5 also has violations, because 3 is barely higher than 1 and wave 4 basically retraces into wave number 1. So the waves, how they are labeled here, don't add up. And that's what we're going to focus on, basically. And we're also going to focus on, where was it? We had wave, yeah, all the zooming. We had this wave here, which is irrelevant, and we had this here, which is also. So we see here at the high that we had when the buying restrictions came into place, we have a fifth wave, obviously, followed by a correction, ABC. I'm going to zoom in again. Hopefully we can see it better, and also auto scale. Should be now, yeah. And so we have an ABC correction following the buying restrictions, although the price went lower than expected. Yeah, and after that we would have our new 1, 2, 3, 4, 5. So, and since this here is according to wave basis wave number 1, it means that in here we would need an impulse wave or a leading diagonal. And I actually also like labeling it from here because this would be our wave 4 in the monthly chart, so the low that we had after the buying restrictions, which means this should be another impulse wave overall or an ending diagonal. Yeah? Now we're going to have to fix this wave here, and the easiest way to do it is to simply say 1, and we see then that the price level for wave 2 would be down here, which went a little bit lower. And then again, that's why you shouldn't try to trade the highs and lows of Elliott Waves, because if you would have done that, your sell order would have been here and you would have missed all that way up. And that would then be our wave 3. Likely till here, making this our wave 4 and giving us an accurate area again for wave 5, which actually went higher. Yeah, and so this part here adds up. It doesn't fulfill all the requirements, like there are some things about like timely predictions. For example, if I don't know, wave 1 is about 50 candles, then you can expect that a specific other wave will also take roughly that time and so on. Yeah, but obviously we're looking at a highly volatile stock that gets manipulated and so on. So there have to be some concessions made to Elliott wave theory within reason to get everything labeled properly. But basically, because it says we have our stupid scales, our wave 1 here, I'm going to lock that. Wrong, wanted to lock the waves. And we can confirm that there is another 1, 2, 3, 4, 5 that fits nicely into without any big violations, like wave 3 not going, or wave 3 being the shortest, or wave 4 going down into wave 1 and so on. It confirms it for me that this here is wave number 1. And as a result, we have our prediction here that wave number 2 will correct down into that area, which we already had on the, what was it, 16th of March. So based on that, we could already assume that somewhere here we will have our wave 2. However, if we then go further, we know we have 5 waves. This is wave 1, which means there is a wave 2, and wave 2 is going to be any corrective pattern. So it could be an ABC zigzag, but it could be any of the other corrective patterns as well. And wave basis detects it as ABC. And if we look here, the prediction would be that our wave C ends up in the area of 160, 130, so where we're actually already in the pre-market. However, in those charts here, we don't have after or pre-market prices. I mean, they are not permanent. When it happens, they will show up eventually, but they don't matter for us. But we also have like additional signs why I personally think that we're going to go down into that area. Now we already are there, but even before that, you could have used, because Elliott waves are great, but there are other things you can do as well. You could have drawn a trend line, yeah, like this, which would have given you probably the idea of a breakout, so not the best way to look at it probably. And we could have also roughly here put a, yeah, like, can I get that one horizontal? God, yeah, challenging. Do we have horizontal? Yep, there. Okay, let's just put it here. So we would have an area of support that here barely touched it and bounced, and then here again also went through, went back, didn't go through, and so on. And basically it would show us that here we have an area of support, and our last candles here actually are below that area, which for me would be another sign that it's likely that we will see the price drop further. That's why I already entered the pending order to buy more GameStop for €1,000 at 140 already last week. And yeah, so that's what we're looking at right now. So the expectation for me would be that we actually in the pre-market, we can actually check real quick where we are standing there. Standing at 159. And I expect that short sellers, hedge funds, regular mood in the market, people that panic because of the overnight drop and sell, whatever the reason is, but I expect that the market opens with another drop, and simply because it would also close that gap here. Gaps don't get always closed, but looking at it, I have like wave C predicted in that area. It overlaps nicely with the area that our wave 2 would be predicted at. And in addition to that, we went below that support here, and we have the gap here. So I have my pending buy order at 140. I may be wrong, it may not go further. We may open at 160, 150, and from there go straight up or something like that. But for me personally, that's just a few signs too many that point towards closing that gap there. And that's why we have a pending order there. Now we can project forward here. So actually gonna get rid of that one line. Delete. Okay, wrong one, delete. Now it's gone. So we can again project the pattern forward and assume that, yeah, that went well. Okay, and assume that our wave C will be today at around 140, which means that our wave 2, so also going to project that pattern forward, our wave 2 would also be here around 140. And then based on that, if I lock that in, we would see our next step would actually be not 2,200 like originally predicted or projected in my post on Reddit, but around 1,500 to 1,800. But again, we also already saw previously on multiple occasions that the predicted value for wave 3, wave 3 is usually the biggest one, so it's never the shortest, usually the longest one. It's the one that has kind of like the biggest upwards movement, yeah. And then considering that we're looking at a short squeeze, that eventually some short sellers might get margin called and so on. So especially in that situation, I wouldn't be surprised if we shoot through that 1,800 easily. Yeah? However, we know that from here on out, according to Elliott Waves, our next stop is, we're currently assuming that this is going to be our low at 140. It could be a little lower, but our next stop would be a wave 3. That goes up towards the range of 2,000 and likely higher. And so that's the reason why I'm not selling. Could have taken profits here, could have taken profits here at B once I already expected it to be an ABC correction and so on. But there is no point in doing that for me, because depending on where I live, for me, for example, if I don't hold a stock, at least for a year, there's 25% tax on those profits. And so it's just a lot of hassle. And for me, the major worry, I used to initially, like in January, trade the waves a little bit, and it actually fucked me big because I had a 5 times leverage position, and when I then sold it at the top and wanted to re-enter, leverage was not possible anymore. So instead of now looking, I lost a couple of digits of potential profit this way, let's say it like this, yeah. So, but yeah, that's why my prediction here is basically that we go from here around today's market open. I expect a drop, I expect the gap to close, and from here to go up towards the $2,000 area. Now, before people ask, will that happen today? Will that happen tomorrow? If you again, cheat sheet, impulsive wave pattern, wave 3 is always another impulse. So from that point 2 to that point 3, we will have another 1, 2, 3, 4, 5 pattern that fits in there. So we will have the price going up, correction, price going further up, correction, and price eventually going to 3. And again, because of those price levels, because they're very likely to kind of like bring some of the short sellers into a predicament, it's likely that our wave 3 or our wave 5 shoots higher here, in my opinion. Now, as a result, I removed the original wave that we had from April. But as a result, basically, if we remember again that each wave by itself is part of a wave of a bigger magnitude or scale, so we could basically, we have our one wave here, which would be our wave 4, and our wave 3, our wave 4, and this here upwards will make our wave 5, followed by an A, B, C correction or any other form of corrective pattern. And after that, we'll see if we go further up. So it could be that this wave 5 pattern here will already be the squeeze, although the highest point that we have here is at $10,000 or $13,000 actually, if we log that real quick. Which in my opinion is unlikely, because if we look at the patterns on monthly charts and so on, we also are able to get predictions that take us to $1 million per share. And maybe somebody knows better than I do in that aspect, but the way I see it is all it takes is if shorts still have GameStop shorted more than 100%, they are forced to cover. Then as a result, it means they have to buy every available share at whatever market price is offered. So if there's only one person out there that has a sell limit order at $2 million per share, that order will get executed. It doesn't mean that everybody or a lot of people will sell for that price, but if only one person asks for 2 million per share, and of course the conditions are met that the shorts have to buy every share at least once, then that price will get executed, and that's where we will see the top. In any case, even if this here would be the top, so even if we would be talking about, okay, it's going to go to 10,000 at wave 5, and after that we see an ABC, and then we have a 1, 2, 3, 4, 5 that goes downwards and brings the stock back to, I don't know, $100, $200, whatever the actual current value of GameStop is. But even at 10,000 per share, it's still a no-brainer trade. It's like, we know it has to happen. Shorts eventually have to cover. Even if they do that slowly, every time they cover, it means they have to buy shares, which helps bring the price up slowly. And I don't know, like from where I'm sitting, the way it looks, it's, even if we don't have a short squeeze, which I think we definitely have one, no matter what the official short interest says, even if, yeah, whatever happens, if they kick the can down the road for another 2 years, I don't see a losing scenario with GameStop. Like, unless you're trading with leverage and you run into your stop loss, but other than that, considering the changes that the company makes, considering the potential short squeeze and so on, I expect that if we don't see a short squeeze, that GameStop will trade at beyond $500 anyway within a year, and therefore it makes it a good investment for me. Yeah, sure, the return at $10,000 per share would be better, but selling at $500 per share, it's like, even for people that bought above 200, it still is 100% return in a year, roughly, so still makes it a good trade. And long term, I actually see no problem for GameStop trading at $1,000 per share. So I still think even without a short squeeze, even if they would have already covered, which is highly unlikely, because if they would have already covered, we would have seen so much buy pressure that this here would by far not be the top. And yeah, so that's the way I see it, and that's basically where we stand from where I'm standing. Yeah, like we could go into smaller time frames, and basically because each ABC by itself would be another, for example, the wave C should be another impulse or ending diagonal. So we could then try to confirm that, and we could basically map things out further and get smaller price points. But especially considering the volatility and the manipulation going on with GameStop, I don't think that if we go any smaller or below the hourly time frame, I don't think that we get any really accurate results there. I think on hourly it's already quite okay. Now before we follow Noah's wish and look at the 4-hour chart, I actually want to show you guys a neat trick, but for that we're going to switch to TradingView because there I'm a little bit better with drawing trend channels. We're also on the hourly chart, and yeah, let's move this like this. We're going to look at this part here. So this 1, 2, 3, 4, 5. I'm going to show you an easy way how you can draw or identify Elliott waves. Now, if we zoom in, so this was our 1. The first thing to remember is that basically the bigger waves always start at some low point, so at the end of some correction, or at some high point, so at the end of a bull run or bull rally or whatever. And what you can do is we can start to label them. So we say this here was the low point to start, and then the higher point that we have here, this here is 48.29, and this here is 46. So that would be our wave 1. And that's the next low point, making it our wave 2. Now I'm just going to put the other ones somewhere here for now. Now what you can do is you can just take a trend channel, and we call that our base channel. And you connect point 0 with point number 2 and make it a parallel through point number 1. And the moment you have a breakout out of that trend channel, you are most likely looking at wave number 3. Now, assuming, and we're actually going to make this interesting and use the replay feature and start from here. Okay, cannot replay here because it's only on the daily charts. Okay, sorry for that. But yeah, assuming we're watching this in real time, so we cannot see the right part here. Yeah, so David asks, so the top predicted value is what range based on Elliott waves, and 2, what if hedges will continue to create shares to manipulate? Ask yourself this: do you think they haven't already manipulated other stocks during the last 10 years or so? And I think they have, maybe not to the same extent, but in those other stocks, so like Tesla, where we have at the end of 2019 a short squeeze, you're still able to draw your wave patterns. The only thing is that when the Elliott waves predict the price at, I don't know, 500 per share, because of the short squeeze, it actually got higher. Yeah, but the Elliott wave principle still holds. So I honestly don't know, outside of buying restrictions, so of like manipulation that really prevents how everyone else can trade the stock, I don't see why wave patterns shouldn't apply, because I looked at the Volkswagen squeeze. Unfortunately, there I don't have a dynamic chart, but somebody shared it, and in the post that is linked in the description down below on Reddit, when you go through the comments there, I basically just roughly mapped out the waves. So I looked at the Volkswagen squeeze, which is probably the closest example that we have to our situation, and at the Tesla squeezes, and in both cases Elliott waves apply from where I'm standing. So yes, they may manipulate, and the thing is, they may create more shares and drive the price down further because there are more shares in circulation, which means each share becomes worth less compared to the original count. But eventually we have to get back to the original count of shares, so, or to a close number, or without any, I don't know, like made up shares. And then eventually each share will be valued differently, because I don't know the number of shares that are currently actually in circulation. I know that it's more than 100%, but I don't see why it matters in terms of Elliott waves. Like, I really initially, when I started to learn about Elliott waves, I was also confused, but the more I use it and the more I see how accurate it is, the more I develop and develop a trust in that. Yeah? So, and it's, I don't know, it's just, there's only so much they can do, and I think they already pulled their biggest gun with the buying restrictions, and I don't think they can pull that gun again. Yeah? And other than that, like last week when we had the drop, and then MarketWatch wrote about the drop before it happened and so on, and basically tried to spread fear and get people to sell and so on, I don't think what else they can do. They can kick the can down the road and play with whatever trick they have left. But I think it will happen. I think it's just a matter of time. It may happen today, it may happen in a month, it may even take a year, but eventually they have to close their short positions. Maybe they manage to do so over time because they create fear. Some people sell, they can close a little bit, the price goes back up, they create some other random BS about GameStop. Some people sell, they close a little bit, but in the end they have to close, and in the end, even without the short squeeze, that's the main point. Elliott Waves, every time I was wrong with Elliott Waves, it was because I labeled the charts wrong. Like, again, like there are situations like here, this ABC, it could be that this ABC is not an ABC, but some other corrective pattern, yeah, which means then this predicted price area would be wrong. Now you see, for example, here that one has a question mark. Unless we have a wave 2, we cannot be 100% sure if that actually is already wave 1, but it could be that the price goes up here and this here makes it then wave 1, as long as we can fit another 1, 2, 3, 4, 5 inside it, yeah. And so every time Elliott Wave was wrong from my trades, it was because I did something wrong. When I label the charts correctly, I'm every time surprised about how accurate it is. And even here, like the stock has already been manipulated here as well, but still wave 1 predicts wave 2, wave 3 doesn't predict, or wave 2 doesn't predict perfectly because we have that gamma squeeze here. But wave 3 then again, if I can highlight it, okay, let's get rid of that line if I can. Wave 3, yeah, also didn't predict perfectly, but we see, okay, in that area we can expect it to go, and which means based on that, I could have placed buy orders here, and if it goes further, buy a little more. And if we look at wave 4, again, we have a perfect prediction of where the price is going to go, and they already manipulated in that area as well. So, like that's, yeah, it's like, in the end, like the biggest question I think is, do you believe in GameStop, like as a company? I'm not a huge fan of them within Europe, and probably many in the US are same. As a former gamer, like the idea that I buy something for $60, $70 or euro, and then I trade it and it's pretty new and I get 10 euro in return, I just feel screwed over, yeah. But their business model works in my opinion. The transition that they are trying to accomplish to e-commerce is going very well for them as far as I can see. With Ryan Cohen as member of the board and all the changes that they're making, I can see them succeed. I believe in the company. So even without a short squeeze, simply because in the past, Elliott Waves, and I'm not talking about just my recent past, if you take a look at this book here, yeah, I'm not sure if I can find the pages real quick. There are scenarios going back to 90-20. Yeah, so there are some scenarios, I mean, they are not looking at specific stocks, but they are looking at, I don't know what they're looking here, at the Dow Jones Industrial Average for the last, what's that, 47 years or so, and the wave supply, yeah? So it's not something that's just for me for half a year, or whatever, how long I'm dealing with Elliott Waves works, but there's like so much evidence that shows that the predictions of Elliott Waves just so often hit the nail on the spot. So even without a short squeeze, I expect the market to move like this. We may not go to if there is no short squeeze, we may not go to this 1,800 in, I don't know, like a week or a day or a month. It may take a year to get there, but I expect it to go like this, making the trades for me a good investment anyway. So, and the big question is, if you believe that GameStop should be valued above whatever it's valued right now in the near future, or in a year from now or 2 years from now. So if you think like, okay, in 2 years from now, GameStop is likely to trade at $500 per share, even if there's no short squeeze, and you bought at $50 per share, it makes it a good trade. Even if you buy now at, what are we talking about today? $150, $160 per share, still makes it a good trade in my opinion, yeah? And that's all it is. Like, I know Wall Street Bets is about like YOLOing all your money and basically get rich or burn everything. But I don't know, if you look at the people that really made a lot of wealth, most of them didn't do so by just gambling with all their money. Yes, you can gamble with a fraction of it, but because they invested long term in certain companies. Yeah, it's like the same thing, even if you pick boring companies, if you invested in Tesla since IPO, which is not that boring of course, but I don't know, Apple, Microsoft, all the big companies out there that have a future because they're focused in technology, all of them would have made you more than decent returns over the last, I don't know, 10 years, 5 years. Yeah, so that's why I don't worry about the manipulation. Yeah, I don't have stop losses in all my GameStop positions, and just for transparency, so up. I wish I would have a better broker available, but unfortunately not. So you can see right now, I have 10,000 in GameStop and another 1,000 pending order, and I don't have a stop loss there. I don't care about it. It's like if it drops, even if it drops to 40, if it would drop to 40 again, I would just check how much money I can spare right now that I can afford to lose to buy more. I see this as a trade opportunity that you have once in your lifetime, if at all. Yeah. At what price would you consider to sell? We're going to get there. I'm just going to read the other comments real quick, and then I'm going to finish real quick with the tips here, so you can apply Elliott Waves real easy. And then we also have to look at the 4-hour chart. Haven't forgotten that. And they're doing it. Why should they? I would think GameStop would have a stock split. Yeah, but even if they have a stock split, first of all, a stock split is usually announced in advance. It's not like, okay, we're going to have a stock split right now, and the short squeeze is going to last 2 days or so. And even if they have a stock split, you get more stocks or more shares. So it's the same numbers. So if I say now I think it will go to $1,000 and I have one share, but then they make a stock split, so I have 2 shares, but it goes to 500, so it's still the same. Like a stock split doesn't really matter. The only thing a stock split does is when we look at TradingView, where, not the charts, but tradingview.com. And somewhere, where is it, profile? Yeah. That was my prediction last year based on Elliott Waves, roughly, for Tesla. And the only thing a stock split does is screw up the replays on TradingView, because suddenly this happens, yeah. Although the prediction is fairly accurate, like we hit that mark here, so it went up a little bit higher than this, we went down to this, and then we went up to 2,000, or actually above 2,000, so yeah. And since we're there, another example would be Twilio here, where again I suck at predicting corrective patterns, yeah. But even here, A, B, my C went a little bit too far, and overall, but still quite accurate. So I like Elliott Waves, and I don't care about much else, to be honest. Like I look at other indicators, and obviously I look at news and technical and fundamental analysis, like in terms of things like short interest and all that stuff. But besides that, my biggest question for me is like, what Elliott wave are we in when I look since the IPO? So do I know if we are moving upwards or downwards in general? And then I try to narrow it down and find a point, like ideally the beginning of a wave 3, so I can buy shares. Or like in Tesla right now, or NIO, or many other stocks, where in my opinion we're at the end of a 5th wave and currently in a corrective pattern. So then I'm basically just preparing my buy orders at whatever price level are predicted. One thing I don't understand, how can Elliott Waves still account for hedge fund manipulation? The reason why they can, in my opinion, is because hedge funds are also humans, and all Elliott Wave is basically that guy just had no life at all and looked at the Dow Jones for, even before there was a Dow Jones, so basically he looked at old records of stock exchanges and blah, 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 and they were then, there's some kind of like, how do you call it, kind of like a normalized chart for things before 1900, whatever. So everything makes sense on US dollar. And he analyzed those patterns and just recognized them. I'm sure you've seen graphics like, I don't know, when you see like hype and euphoria, and then it's gonna go back up, and you know, like the waves that you see where you see the smart money that sells at the right point and the dumb money that basically buys at the top and sells at the bottom, yeah. And if you look at that, it's the same thing like Elliott Waves, just that Elliott Waves give you specific price points where it's going to happen. It's all about human psychology, and hedge funds are also humans, in quotes, yeah. So, and they also want to take advantage of human psychology. That's also why they have those news campaigns about, oh my God, the drop in GameStop, even before it happened, yeah, because they're that dumb partially. So yes, they can do things apparently like buying restrictions, which Elliott Waves didn't account for. That's why we, on the monthly chart, which we looked at in the beginning of the stream, have a rule violation. But there, Elliott Waves also explained, if you look in the book, you can see there, I think end of chapter 1, it explains that Elliott Waves apply when the market can behave naturally, not when there are government restrictions or other restrictions in place that prevent like natural buying and selling. Yeah? So it's simple, like what Elliott Waves proof is pretty much that we as humans haven't learned a lot during the last 100 or 200 years, that we still make the same mistakes, that the majority of people still follow the same principles. It's the same if you look at Bitcoin, like when it soared up to 20,000 a couple of years ago, and then were people like jumping on that train and just to watch their savings disappear, and instead of holding, they sold and are probably regretting it right now, yeah? Because they would have nicely recovered and made a decent profit over a longer period of time, but still, yeah. For me personally, I blew my share of trading accounts, yeah. So I think everyone on, yeah, like Wall Street Bets did so, and it was because the biggest mistake in my life was that for a long time I aimed to, how can I get rich quick? Like what can I do to be from whatever, like $1,000 in my pocket or net worth to $1 million, yeah. And ever since I stopped doing that, and I focus on, okay, what can I do to make more money? So like what kind of passive income streams are there that I can build, and how can I increase the income from existing income streams? And additionally focus on taking a percentage every month, around 10% of the money that I make, and investing it. And I invest it long term. And if I buy a stock, I buy it because based on Elliott Waves and other criteria, I think it will go up to a certain point. And if it goes down temporarily, I just look at the chart again, apply Elliott Waves again, try to figure out if I was wrong. And if the pattern looks the same to me, so if there may be just a temporary smaller drop or lower drop, I just hold. I'm not gonna, other than with GameStop, where currently a bigger portion of my money is in GameStop, but besides that, like on my other portfolio, it's diversified in multiple stocks, and I don't care if all of them are minus 10 or minus 20% right now, or if they would be, because I know why I bought them. I know I trust Elliott Waves, so I may have gotten the entry point a little wrong. So like if we think about maybe I bought here instead of buying down here, yeah, but I don't care. Like as long as the waves add up, as long as the patterns add up, I'm 99.9% confident that we will see the move upwards and that it will go towards that area, or in that case even farther, yeah, or further, yeah. And so I don't know, like I think the manipulation doesn't matter long term. It's like a temporary measure. It may reduce the height of the short squeeze because some people panic sell, and the hedge funds get the option to maybe close some of their shares or shorts at an acceptable price or whatever. But I don't think it changes the overall equation. Yeah, I mean, the thing is, if we look back here real quick, since we have our wave 5 going up, no, our wave 4 going, wave 3 going up here, and wave 4 going down here, we basically, what could happen is if they drive the price down further, it would move our wave 4 that we had based on the monthly chart down further. But they can only move it so far because it still would have to follow other Elliott Wave rules. So it actually is already violating a rule here, as we mentioned on the monthly chart, because of the buying restrictions. So I don't even see it falling down further much. I don't see that we can reach $40, $50 again. Yeah, like, and even if we would, then what would happen is I still see the upwards movement, and I would just average down. I would buy more shares as long as my overall prediction is that we are currently in a 5th wave, which means the wave will go upwards. I'm gonna just buy more because I know, based on Elliott Wave and the accuracy that it's shown to me and other people in the past, my bookmark fell out, then that we go up there. And so kind of like, I got rich because of 6 GME options, bought the 6 for blah, 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 sold for 60,000. That's nice, yeah. Like that brings us, I mean, congratulations on the trade, but that brings us to another point, the definition of rich, yeah. It's like when I was younger, I mean, you guys maybe also remember, maybe you're still that young, when I went to school, so I only had kind of like pocket money or allowance, and 200 euros was a lot of money for me. Then I had my first job, in quotes, internship, and I earned, I don't know, like 400 euros per month, and it was a lot. And then eventually I earned my first 1,000, and it was a lot. And back at the time, I always thought if you earn 10,000 per month, you're rich, yeah? And around the same time, my mom opened a small bar, and she actually started to earn 10,000 per month, but she was far away from rich. Like it sounds so much like 10,000 per month, but if you actually, like the image of rich that the media teaches you, like Lamborghinis and stuff like that, yeah, with 10,000 per month, you cannot do that. Like, and if you do it, you have to turn over every penny twice. So you drive a Lamborghini, but you have to worry if you can pay the, I don't know, the next set of tires or the gasoline and so on. So definition of rich changes. Like, for me personally, right now with all our business or income streams, we also like generate 10 to 15,000 per month in revenue. We don't have a lot of business expenses, so most of it stays as profit. Business is incorporated in Hong Kong, so we also have like a huge tax advantage and blah, 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 and so on, yeah. But still, don't consider us rich. Like, I have the benefit of not worrying, and obviously our GameStop trades, once we get to a decent price point and so on, and if I were to take profit, blah, 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 they would provide us with some security. But even if you have a 500,000, I don't know how it is where you live, but for example, a really nice apartment here in Ukraine, in Kiev, for example, yeah, I checked for penthouse apartments in Kiev, and they are obviously cheaper than in New York and so on, but you still look at 500,000 unfurnished and unrenovated, yeah? And then you just own the apartment, and then you have the ongoing utility bills and so on, and you basically gave away your cash. So my personal calculation that I did a couple of years ago, it's probably not accurate anymore, but it was like 1.428 million euro, so maybe $1.8 million or so. If you have that and you invest it very conservatively, so no huge risks, then you can have an average life just from the interest. So no Lamborghinis and stuff like that, but you would have not to work anymore and can just do what you want, but you cannot fly, I don't know, first class vacations and so on. If you do stuff like that, eventually that money will disappear. So without actually spending your principal, I think is the right word, so only spending your interest, 1.428 million euro was my calculation back then, yeah. Nowadays I switched, I just think in cash flow. I really like everything I do, I try that it brings me some kind of cash flow. The trading I do to build up more funds based on money that we accumulated already and that I don't have any other purpose for. But every other thing, like I have another YouTube channel that has 30,000 subscribers and generates around, currently around $200 to $300 per day in revenue. We run a small software business with around 1,600 users worldwide. Not all of them are paying users, but still, which generates 5,000 to 6,000 monthly revenue and so on. And then we years ago started to do affiliate marketing, where we also still every month make between $300 and $3,000 and so on. It just sums up. And everything I do is focused on creating more revenue without adding more work. So I consistently work a certain amount of hours and try to build more revenue streams because cash flow is king in my opinion. Yeah. But yeah, let's finish this real quick. So this part here, so short summary. So in order to really quick map out your Elliott waves, you need to find a low point. You find your 1 or 2. And by the way, if you're looking at a downwards trend, it is the same thing, just inversed. Yeah. Then you connect point 1 and 2 with a parallel, point 0 and 2 with a parallel through point 1, and this will be your so-called base channel. Now, again, assuming that we didn't know those candles yet, so we see the breakout, and this is our confirmation that we're now in wave number 3. So this would be the point where you want to buy, because wave number 3 can never be the shortest. So, and even if you get in late on wave number 3, you would have your wave number 4 and then your wave number 5, and you still end up in profit. So it's, yeah. But anyway, so we move on. We have the breakout, and we would draw our wave number 3 here because we only see this candle. We don't know all of that stuff yet. Yeah. Now, the moment we have our wave number 3, we can draw another channel, and it's called the acceleration channel. And for that, we connect point 1 with point 3 and draw a parallel through point 2. What we do with that channel, it helps us to identify when wave number 4 started. So while it doesn't tell you a profit target for wave number 3, it basically helps you to tell you, okay, wave number 3 is over, you should sell now because you're now in wave number 4. And it happens when you see the breakout at the bottom of this channel. Now, I want to point out the method with the trend channels works very well, but it's not 100,000 or 100% accurate, but it's great in general to, especially in the beginning, to map Elliott waves. Now, the price would move on, so we would have the next hour and the candle goes here. So I'm going to move point number 3 if I can. Yeah. And again, we adjust our channel, point 1, point 3, and parallel through, yeah. Which one do I have to drag? This one here, parallel through point number 2, roughly. So we would now know we're still in wave number 3, and if we would see a breakout below here, we would be in wave number 4. Breakout doesn't happen, so our next candle shows up, and it's this one here. And we again adjust our trend channel, point 3, point 1, and again point number 2 roughly. Yeah, like this. And we again know, okay, once we have a breakout here, it's when we have our wave number 4. Now the next candle is lower and so on, but then we have another higher candle here, and obviously wave number 3 has to be a high point. So we would move our wave number 3 here, and we would also adjust our trend channel accordingly. So yeah, I'm gonna just draw it again. So again, point number 1, point number 3, parallel through point number 2, yeah, like this. And so we would basically, we would have bought somewhere here because we have the breakout from our base channel. And we would have seen this candle here. Either for some reason you would have already taken profit because it was a huge increase, or you would have waited for a breakout below that would indicate we're now in wave number 4. Now you could sell here if you want to, but if you keep in mind that wave number 5 will also go at least to the area of wave number 3, but in most cases beyond it, holding makes more sense, and wave number 4 may just serve maybe to buy more shares. Now once we know wave number 3, what we do is basically we have that breakout and we can draw our wave number 4. So we know our 3 because it was the highest point. We have our breakout through our acceleration channel, and which gives us our beginning of wave number 4. Again, we don't see the candles here. We don't see all that part. We just see that this candle just showed up and developed like this. And we can now try to draw our deceleration channel, which is a little bit harder. For that, we take another trend channel. We make one point in 3, and then we try to pick a candle next to it so that we basically get a line that hopefully covers or includes all the candles that we have. So I'm going to pick this, and you see that all the candles here are within or below that line, and we draw a parallel through whatever we perceive is our wave number 4 candle. It's not so important what happens on this side, but what's important is we basically wait for a breakout on the top side that will indicate that we are now in wave number 5. So that's kind of like the crucial lesson here. Now the next candle shows up, nothing changes. Next candle shows up, nothing changes. The next candle shows up, it's lower than the one that we had before. So we can move our point number 4. But we don't necessarily, we could also move the downside, so the bottom line of our trend channel like this. But the downside here is not relevant that much, so it doesn't really matter. We still don't have a breakout here. We have another candle that goes even lower, so we can again move our point number 4. It still matches up with the channel, so it's fine. And now we finally have our breakout here, and that indicates that we're now in wave number 5. Now, there are a few things here. Number 1, in a regular scenario, so when you don't have some kind of squeeze here, very often wave number 4 will go down and touch the top of of that base channel that we have here. If it doesn't do that, it will often, if you kind of like duplicate the distance, it will often touch the area here. That's not always the case, but it happens often enough that you can use it as some kind of like guideline in general. Yeah. Overall, the smart idea is, however, to read the book and try to understand how you can predict the price ranges based on previous wave patterns. Yeah. But as a starting guide with the trend channels, it's very easy. And once we have our wave number 4, we can draw another trend channel, and I'm going to clean up here a little bit and basically remove that channel. Please let me remove the channel and that one as well. So the first one was our base channel, acceleration channel, deceleration channel, and then we have our final channel, however you want to call it. And for that we connect wave number 4 with wave number 2 and draw a parallel through wave number 3. So, or at least I try to. Need to disable the magnet. Yeah, so now we can get there. Yeah, so like this. And if we now zoom out, that final channel provides us with a profit target. The price of wave number 5 will often touch the medium or the median or the top line of that final channel. And if we zoom out further, yeah, oh, my mistake, we're already out enough, and switch from logarithmic to arithmetic charts, we can actually see, and that's like the tricky thing here that we have to switch back, we can see that our wave number 5 actually goes exactly to the top and shoots even beyond it to basically end our 5th wave. Yeah, so just with a few trend channels, you can basically map out impulse waves fairly accurately and have an idea if you're in wave number 1, wave number 2, wave number 3, and so on, and even get an acceptable profit target for your wave number 5, so where you think it should go. Yeah, so covered that, and so many comments. Yeah, so we still have a lot to catch up. Yeah, David also mentioned that obviously they are already doing the manipulation, and why should they stop? Because it will bankrupt them. And also, I mean, we talked about it. Whatever they manipulate, it may temporarily bring the stock price down, but eventually, like, it's just, I don't know, like, take the time, read the Elliott Wave book, look at all the examples, take random stocks that you invested in the past or that you're currently investing in, and try to follow the rules to map out the wave patterns. Look up every short squeeze that you can find in history and try to map it out with Elliott Waves, and then just be impressed or surprised how accurate the wave patterns are. And many of the things, other than the buying restrictions, and that now more people pay attention to the negative news coverage, many of those things are not new. They did that stuff for sure with every other over-shorted stock the last 10 years, 15 years, I don't know how long. Yeah, maybe even before there were retail trailers and everything was traders. So that's why, for me, Elliott Waves, because they're based on human psychology, and if you think about trading algorithms, unless they're based on machine learning and so on, although even then, yeah, bear with me. So Elliott Waves are based on human psychology, based on so many examples that guy looked on in his boring life, apparently, to come up with the exact rules of how things work out in literally every case. Yeah, and now if you think about high-frequency trades, either follow rules that are pre-programmed by a human being and therefore again follow human psychology, or are based on machine learning, which means the machine learns based on previous patterns, but because all previous patterns are already using or following Elliott Waves because they are based on human psychology, so all the trades before, the machine learning algorithm would basically also just enforce Elliott Wave patterns. It's like if you think about things like support and resistance, yeah, why do we have support and resistance at certain price levels? It's not that there is a support or resistance, it's because it's, in my opinion, one of the most basic trading tools. Spot support and resistance levels, and you know where you likely have a good buy or sell option or where you should take profit. And because even the most, I don't know, like the dumbest trader out there understands that at a support level, so where the price previously bounced off a couple of times, there is a support or resistance, we kind of like enforce that. So because we as humans, or enough humans, set their take profit at the next support or at the next resistance, and set their buy order, their pending buy order at the next support. Because we believe it is like this, and if enough people do it, you have so much buy or sell volume at those levels to enforce that theory. So that's what makes it right. And again, it's human psychology. And I don't know what's the secret behind the price levels or Fibonacci retracements, but it's also human psychology. I'm sure there is some kind of like inner twist in our brains that when we see a retracement for a certain percentage, that somehow that percentage triggers something different than if it would be 5% less or more. Yeah. And thank you, Jess. Yeah, I'm doing my best. Like I'm also just an ape in quotes, like just sharing what I already learned and how I think things go and why they work like this. It's actually one of the reasons why I wanted to do it live, to get, first of all, questions that I wouldn't think about, and also if somebody has a completely opposite opinion, that they can also just say whatever, like I think it's totally different like this. Yeah. And but yeah, I think outside of buying restrictions, so like situations where the regular buy and order flow doesn't exist anymore, I think Elliott Waves will apply. Yeah. So, and that's why for me, and again, as mentioned multiple times already, even without a short squeeze, and even if we see a further drop below 140, actually markets open, where are we? We are we already back that far? I already had open back there or not? No. GameStop. So we're 152, yeah. But so even without all of that, I see based on Elliott Waves, based on the changes within the company and so on, I see it's a good investment. So yeah, but yeah, so the trend channels, super easy method to kind of like get a hang of how Elliott Waves work. And yeah, if you apply them to enough charts, you'll just see how accurate they are. And yeah, like feel free, sign up for a 14-day trial of wave basis and just pick random charts and use the automatic mapping feature. And you just need to know the basic rules for the 1, 2, 3, 4, 5, that wave 3 can never be the shortest, wave 4 cannot retrace into wave 1, and wave 2 cannot go below the 0 point, so the starting point of the wave. And if you do that, you will see that it applies. I don't know, I haven't seen a chart where it doesn't. Yeah? No, they don't have an affiliate program, so yeah, just check it out. Like, I used their free trial once because I was looking for an automated solution that helps me out. And it's actually one of the few softwares where I don't mind paying for it because it just saves me so much time. And even though, again, it's not 100% accurate, like we saw somewhere during the stream, that the 1, 2, 3, 4, 5 here got labeled completely wrong. So you still have to understand the basics, but then you can either use the trend channel method that I just showed you to confirm the pattern, or read the book and follow the guidelines in the book. Yeah. And by the way, the cheat sheet that I mentioned before, so just going to share that one real quick again. Yeah. So that has all the different wave patterns and also has like the information. So as we mentioned, oh, here we are. Yeah. So wave 3 is another impulse wave and so on. Or when we look at wave 4 here, it says it's another corrective pattern. And when we look down at this table here, we see that wave 4 with, I think that's 32% of the time is a zigzag, 3% of the time a double zigzag, 1% of the time a triple zigzag, 48% of the time FL, what was that? Does it say FL here? FL. A sideways, basically the sideways movement here, FL. So that one sheet of paper contains so much information about Elliott Waves that helps you confirm and so on. And also about the height of the waves, so the price movements. In the boxes here, you see like wave 2 or wave 4 cannot go into the area of wave 2. Wave 2 should be bigger than wave, no, what does that mean? Yeah, like trying to show something, and then wave 2 smaller than, wave 2. So basically, where do we have it? So get sharp, no, stupid camera, yeah. But yeah, if you download that, you see that wave 2 should be shorter than wave 1, which basically is the point that the wave 2 cannot retrace into the 0 point, yeah, and so on. So it's really, that cheat sheet link is in the description below. You can just download it, print it, or put it as your desktop background or so. Is really a huge time saver, and or also helps to confirm and improve your theoretical knowledge about Elliott Waves. Yeah, and no, I mean, so Chest is asking if we can use trend channels for the corrective patterns. And maybe you can, I don't know. Haven't seen anyone do it and haven't figured out for myself how it would work. But once you have again, if you read the book, either the physical copy or just for free online, there are all the chapters there. There's a separate chapter that just focuses on how to predict those time and price levels. So like how long it's going to take likely and where we are going. And That's pretty much all you need. Or you could also, if you think about it again, every wave is part of a bigger wave, yeah? And so every corrective pattern that you have, so every A, B, C and so on, is basically a wave 2 or a wave 4 of a bigger wave, yeah? And if it's a wave 4, you know by definition, so you would need to zoom out or look at a bigger time scale and try to map out the 1, 2, 3, 4, 5 there. And then every wave, or when you know it's a wave 4, you know that it cannot retrace into the area of wave 1. So it would always give you a worst case scenario where you could put your stop loss, because if the price would go there, it would mean that your wave labeling was wrong, and then it's anyway better to take the loss than to hope for a good outcome, yeah? But overall, it's just, I think it's like, that's the one trading theory or method where it makes sense to really learn it and just look at charts and try to apply patterns and just, yeah, it's like so accurate. It helps you to know where things are going, and it improves your accuracy with all your positions. Sure, if you YOLO all the time with high leverage, it may still lead to you getting broke because the price may move a little bit further than what you had predicted. But if you invest in multiple different assets and so on, it's like a great thing to have at your disposal, yeah? Yes, I'm planning to post on Reddit again. In fact, something I haven't mentioned so far in this live, based on the post that I wrote, the guys from ElliottWaves.com reached out to me, and I'm trying to get, in case you didn't notice, on Elliott Wave, they also have their trading, or what's it called, traders, not trader, but traders classroom with, what's his name, Jeffrey Kennedy, yeah. And that guy, I mean, watching his videos is a little bit boring, and he talks slow, so I have to watch it at a higher speed, but he's like really amazing with Elliott Waves. And I'm actually in contact with them, and I'm trying to get Jeffrey to make a video about his Elliott Wave prediction for GameStop, because while I'm fairly confident in what I'm doing with Elliott Waves, thanks to all the tools at my disposal, that would be like the ultimate Elliott Wave guide. But I'm waiting for a reply there. So if I get something in a couple of days from them and they will make a video, then I will obviously share that definitely and spread it wherever I can. And if they don't, then I will write another update myself where I think things are going. Yeah, but I just figured a live is the better way to address questions that I might overlook. And it's anyway still with the live challenging to address everything. Now we have the sell target, that's people wanted to know. We already talked a couple of times about manipulation and stuff like that. Yeah, at what price would you sell? Seen a question a lot. My layman fear is that when injections into That's an interesting. My layman theory is that when injecting synthetics into market, then trading as if human, this compresses time, the Elliott squeeze. Not sure if I understand it fully. Do you mean it compresses the time in terms of things happen faster? Or yeah, that would be compressing time, yeah? So, or it compresses time that it takes longer, Charles, so like, but yeah, I mean, but I haven't thought about that. Like, I think like there is so much manipulation for sure going on in so many different stocks. And since Elliott Wave applied to all of them, all of those that I looked at, yeah, I don't see why it shouldn't apply here. And so far during the squeeze, they applied. Like, if we look at the original post that I made, and there is like here, although in that image here is labeled wrong, or the other one is labeled wrong, doesn't really matter. Oh no, that one is right, but one of the others is labeled wrong, but not so important. So that was before we had the buying restrictions, where I talked about and took that screenshot and talked about that I predicted it, or Elliott Waves predicted we will go into that area. And then the next 2 days we went exactly into that area. And then somebody asked, and I didn't take a screenshot, but I wrote the comment. Yes, I haven't forgotten, we get there. And I wrote the comment that the next thing I see is that we go down to 137 to 207. And the next thing that happened is we went down there and even a little bit further. Yeah. The only thing that we didn't have is the takeoff then because of the buying restrictions. So far within the GameStop trades, Elliott Waves already have been highly accurate. Yeah? The last example would be that in the original picture that we have, I don't know where, or we don't have it, but somewhere here, where I mentioned somewhere, where are you? 140. Great, are there. Yeah, so where I mentioned here, so that I wouldn't be surprised, wouldn't be surprised if the price falls into the range of 131 to 161. And if we look, and that I also mentioned that I expect to see the gap at 140 closing. Let's see if my pending order triggers. So it's like even within the GameStop chart, although it has been heavily manipulated, the only point where the wave patterns were wrong were here when the buying restrictions were put into place. And after that, once we had a few more candles, we can again apply an Elliott wave pattern. The funny aspect is, here in the original mapping, we would have looked at a wave 5 around $1,000 per share. So if they would have let it happen back then, the peak, according to Elliott Waves, would have been at $1,000 per share. Maybe a little bit higher because some apes would have had their sell limit orders at 4,000 or I don't know, 4,690.20 and so on. But we would have looked at a lower price. Now, based on the manipulation, the new mapping of the waves looks a little bit different, and our overall projection just for the next wave that's coming from here up and then small correction up is $10,000 per share. So based on Elliott Waves, if they would have let it play out here, they for sure would have lost a lot, but it would have been way cheaper. If it plays out now, then it will be at least 10 times the cost for short sellers. Yeah, and yeah, so. But I think that settles the question if it's like based on the current manipulation, and so if Elliott Waves still apply. Enough examples here that show that during the GameStop situation, during other short squeezes where for sure also manipulation was going on, Elliott Waves apply. That's why I trust them. Yeah, the only question for me now is if we see 140, so my pending buy order triggers and the gap is closed, although gaps don't always close, or if we don't and I'm still have €1,000 left to buy at another price point. Yeah. And with that, we finally get to Noah's request to look at the 4-hour time frame. We're just going to switch here to 4 hours. I don't think it's different. Like, have an hourly chart open here. That is a little bit fuller. And if we zoom out from here, so not all the way, but I think like even on first glance, we notice that the 4-hour chart doesn't change much. We're going to auto-label it. Again, one of the best features of wave basis. We already know that here we have definitely the start of a wave. And according to my labeling on the monthly chart, it's the third wave, fourth wave, and here we go towards our fifth wave. And that means that this wave 1 and 2 here is labeled wrong because it assumes this is the absolute starting point, but we assume that this is actually wave 3, wave 4, and now we go to wave 5, which means that the profit target, if I project that here, so let's zoom out, the predicted profit target here actually is still correct because we get the same projection at the hourly chart. Yeah, so we can leave those waves there. And auto scale, lock, and zoom in. It assumes this here is wave 1, which means we have an A. And again, you see like the A is down here. The prediction for point B is almost on spot. Prediction for point C is not on spot because they're again buying restrictions. They were here, yeah. And so we have our point C here now. And again, we also, if we go back to our cheat sheet and we look at a zigzag with ABC, so in the corrective pattern section, then we see that wave C, so from B to C, can be an impulse or an ending diagonal. And an impulse is this 1, 2, 3, 4, 5. And we can see that from B to point C, we have another 1, 2, 3, 4, 5 that also does not violate any rules. So it's like wave 4 doesn't retrace into wave 1 and so on. So, which confirms that this is very likely accurately labeled. And then we have our starting point here again, and the wave here is likely labeled wrong again. It's not finished yet, so we can project that pattern forward. And it would expect to go from here to here and then higher. But it's more likely that even on the 4-hour chart, our labeling that we made on the hourly chart of this, I moved the wrong one. Yeah, there's no, there, undo. Because again, we label wave 1, it predicts pretty accurately wave 2. Our wave 3 is not predicted very nice because we have the squeeze here. And then we have our wave 3. It gets the wave 4 a little bit wrong. But when we then label our, again, wrong, up. When we then label our wave 4, we again get a fairly accurate price target for where wave 5 is supposed to be. And that was our wave 5 here. So it again very matches up. So on the 4-hour chart, don't see any difference. Looks pretty much the same. And again, we have an ABC projected to 130 to 160. And and we assume, although that would be wrong because we would actually have a wave from here. But that one we already have on the, wait. No, that's the orange one. That's that one. So that 0 here actually would be here for us. And yep, so it ends up with the exact same result as if we start from February 21. February 21, I'm looking at the, where do we have February? February 10, 11, 12, 13. Yeah, but we're actually starting from February 19 because that's the lowest point. We cannot, February 21 apparently was a weekend, so we can only start February 19. We couldn't start February 22 because then we don't start from the lowest point. But even if I clear the entire chart and we just start from, it will just be the same. So we start February 19 and let it auto label. It will make the same mistake again. It will label, oh, it labels this then as a correction, okay, which is probably one way, and then assumes that the 1, 2, 3, 4, 5 is here. So the auto label here gets it, in my opinion, wrong because based on the, and that's the point that I mentioned earlier. That's why we looked at the monthly chart first to come up with a pattern so we know which wave are we currently in, because then again our cheat sheet tells us wave 5 can be an impulse or an ending diagonal. Yeah. So as a result, when we then look at this prediction just from this starting point, we know that this here has to be an impulse wave. It has to be a 1, 2, 3, 4, 5. Now, since every wave itself is part of a bigger wave, it also means that every wave contains smaller waves. And so as a result, we know that, again, from the monthly chart, we know that this is supposed to be an impulse wave or an ending diagonal. And we see already the start for our 1, 2, 3, 4, 5. And we can then look again at our cheat sheet and we will see that our wave 1 can be an impulse or a leading diagonal. Yeah? So by definition, that ABC here is wrong because the wave 1 can be an impulse or a leading diagonal, which means there the auto labeling just got it wrong, but it got it wrong because we only looked at that limited time frame here. Yeah? It's on it, no matter which time frame we look at, it's like always gonna end up the same way with like a few mistakes. And I think the mistake that, or the issue that's causing it here is that gap here that we had because of the short squeeze. And so it gets confused here and just tries to make sense of it. But if we delete that, it gets down to the same thing. We would manually label it properly to make this another impulse wave. We would move our 0, 1, 2, 3, 4, 5, and again it would add up. Yeah? And you also see, I don't know how many, price levels here also like, yeah. I think the automatic labeling tries to fulfill the requirements, although we saw on the hourly chart that it doesn't work out because it had one wave 1 here and wave 3 here and wave 4 below, so it violated a lot of rules. But I think in addition to that, it tries to find the waves at the close to the price targets that it predicts. And when you then have a bigger jump in here like that, then it obviously confuses the automatic labeling. But overall, I still see that that things work out and we get the same conclusion. Price should retrace to where it retraced, and we still get the automatic ABC here, which for, again, cheat sheet in an impulse wave, wave number 2, can be any corrective pattern. So it can be any of those 6 corrective patterns, or actually, the triangles also count if I'm not mistaken. 8 corrective patterns. And again, don't forget, I'm admitting I'm perfectly straightforward. I suck at corrective patterns. So that's the one point where you definitely don't get to nail me and point out I'm wrong. But so, and it would confirm that because, switching back, while it may not be an ABC here, if we would use that here and try to map out which one of those actually apply, it definitely, and switching back again, it's definitely not a triangle, because we don't have this expanding or so. It's definitely, what we currently see on the chart is definitely some kind of downward movement, like either, not even a triple free, because you notice that here the prices for X and XX stay on the same level, but it's either a triple zigzag, a double zigzag, double free, or no, not even double free, because there the X also stays high. So it's either a zigzag, double zigzag, or triple zigzag. Simply based on the fact that we know it's a wave 2, and that based on the candles that we already have, we can see the clear downward movement. So it could be that it is like this, so like we said. But if it were a triple or a zigzag or something like this, it would work the same way. It would then, basically it would mean that our wave C, so it would go A, B, C, and then from here it would go W, X, and I think that should be it, something like this, So, or actually the 0 would be up here with B, something like this. So I suck at corrective patterns. You know, like I learned first about it. Back then I was working as e-commerce consultant in Germany, and one of my clients, a Russian dude that runs his business in Germany and so on, and he's not very fluent in German, and he tried to tell me, and he showed me on his Forex charts, and he had like an insane trade accuracy. There were so many trades where he literally entered the market exactly at the dip, like plus minus, like really very narrow margins. And he tried to explain it to me, and he was like, it's always 1, 2, 3, 4, 5, but in some broken German, and like it didn't make sense to me, and he couldn't recall what the principle of theory was called. And eventually every year I got back to that topic, and I Googled a little bit, and eventually last year I found that it's called Elliott Wave principle. And why it's not widely known, I think I can answer that. If you scroll through the comments of one of the posts, of the main post, then you can see that one guy said, if it were that easy, everyone would do it. And it's a phrase I react to, like it's an allergic phrase for me, because I also shared it in the reply to him. But for example, when I lived in Germany, I lived with 2 students, and one of them got a new Samsung smartwatch and designed his own watch face. And we talked, and he mentioned that Samsung has a store where you can upload and sell your watch faces. And I asked him how much effort it would be, and he said only an hour or 2 more to get it online there. And I said he should do it, and he said, no, it's for sure not worth it. If it were so easy, everybody would do it. But because I'm a stubborn son of a bitch and we lived in the same apartment, I basically bothered him to a point where he decided to do it to prove me wrong. Now that was like, I don't know, like 4 or 5 years ago. He still has his regular job, but makes more money every month from selling those watch faces than he does from his regular job by now. And it's one of the main problems. It's the same thing. In 2019, I started a YouTube channel, And I know that on the average YouTube partner earns between $2 to $6 per 1,000 views. So if you see a channel with 1 million views, you can on one video, you can calculate roughly how much money they made. Yeah. And so I knew when I start a YouTube channel, it's just a matter of time. It may take me a year, it may take me 10 years, but eventually I will become YouTube partner and eventually will start making money from that. At the same time, I had friends or acquaintances that I tried to motivate myself to do that. And it's as if it were so easy, everybody would do it. There are already so many YouTube channels, blah, 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 and just making excuses, blah, blah, blah. Well, it took me 14 months to reach YouTube partner status. So for my first 1,000 subscribers, it took me 14 months. That was last year in July. Now, in July, August, September, I earned around $300 from YouTube with around, I don't know, 3 hours work per week. Yeah, so not a great hourly rate, especially if you consider 14 months before with no payment. And then last year, November, I decided to focus a little bit more on YouTube. I did a little bit more keyword research, so I put a little bit more effort into it. And then in December, we reached, or end of December, I reached 5,000 subscribers. So 14 months to 1,000 subscribers, less than 6 months for another 4,000. And in December, the first time where we made $1,200 just from YouTube. And now from those 5,000 subscribers on the 31st of December, I think yesterday I crossed 30,000 subscribers. And every month, so like January, February, and March this year, there was no month below $5,000 just from YouTube. And yet there will be people, there will be people that will always, if it were so easy, everybody would do it, and come up with other excuses. People are lazy. That's the main thing. Like people, it's kind of like if you want something, I don't know if you read it, it's Think and Grow Rich from Napoleon Hill. And it's a very old book. He talked to a lot of fucking rich people and basically came up with the solution to becoming wealthy. And it all comes down to having a goal or desire. And it ties in back with what we talked about earlier when Noah, I think, was it, that shared that he already made over 100,000 from his GameStop trades or options. And he said, I'm rich. So like, not I'm rich in kind of like a statement, but he used that word, yeah. And then I mentioned that being rich depends on perspective. For some people, they consider if you earn $10,000 per month, you're rich. I personally don't see it like this, yeah. And which means the only difference between people that get what they want and achieve financial freedom and all the other stuff is they have clear goals. And a goal is something that is timely limited, it's not too easy to achieve and so on, it's very specific. I want to be rich, but it's what everybody tells you. Like every person out there is like, I want to be rich. Life would be so much easier if you had more money. What is rich? What is more money? Yeah? If you say, I want to earn $10,000 per month by the end of 2022, yeah, that's a goal. If you're starting at zero, it's not going to be easy to get there, but it's also far away from impossible. Yeah? And it's timely limited and it's very specific. But the core secret is actually you really need to want it. Like you need to have a burning desire to reach that goal. Yeah. So I worked as e-commerce consultant, blah, 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 and eventually it wasn't making me happy anymore. I couldn't scale it further, blah, blah, blah. So I decided to cancel my contracts with my clients. And in January 2019, yeah, I basically started again from zero. I had like, back then before I met my wife, I was not saving money because for who or for whom. And I was like spending a lot of money to just entertain myself. But so basically back then I started from zero with around like $15,000 to $20,000 in savings and no idea what I'm gonna do. But I knew that I want to achieve passive income where I don't have anybody telling me you have to work now, you can be hungry now, you have to, or you're allowed to go home now and shit like that, where I don't have to deal with clients all the time and so on. And so I tried a couple of things. I built a YouTube channel, we built a blog, we did affiliate marketing in multiple different ways and so on. And because I wanted to get there, no matter what kind of stepstone was in the way, I never gave up. Now we are still not where I want to be. We earn north of $10,000 every month, and I'm far away from the point where I really want to be, but I'm on track. And I have like a life that's probably nicer than those of most people. I get up when I wake up, not when some alarm rings. I work when I want. If I'm not motivated, I just watch a movie, read a book, or relax. So I'm like completely free. I have to do certain things like manage YouTube comments and stuff like that. But overall, I achieved that point already. And the reason is simply because I really wanted to. Where other people find excuses, yeah, like, I don't know, like, for you it's so easy because of this, or I don't have the time and blah, blah, blah. If you really want something, you always find a way to get there. And the same applies with Elliott Wave theory. Like, it's one thing to read that book. I'm not dumb when it comes to financial things. I'm not a total moron, yeah? But reading that book, it's like partially, why do you have to use those fancy words? I don't know what you're talking about. So like, there are chapters that I read over and over again, and I'm still not 100% sure if I understood them correctly. But most people would simply be too lazy, and that's the simple truth. They might start, but they would be too lazy to see it through, to actually read this damn book and ask questions and discuss it with other people until they master it. And yeah, and the other aspect is, yeah, like I said, if I share a post about Elliott Wave theory and some people say if it were so easy, everybody, if there would be a way to predict where the price is going, then everybody would do it, blah, 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 yeah. It's like you cannot help people. It's like some people want to learn and want to achieve something and want to get better, and they will always find a way, and you can have discussions with those people and you will learn from them and they will learn from you, and it's beautiful. It makes a lot of fun. But the majority of people just want results. They want to be rich tomorrow, yeah. And on my main YouTube channel, I'm reviewing cryptocurrency projects. Nothing super exciting. Most of them are not even real cryptocurrencies yet and so on, but some of them have potential, yeah. And in some of them, all people have to do is push a button once per day. And then, I don't know, like I have in one of the projects, I have like 25,000 referrals that signed up with my link, and the project is plans to go to market in 2024. So there's a couple of years, and every day all you have to do is push one button, yeah. 60% of people forget about the app or uninstall it after a week or two. So when they watch the video and they hear, oh my God, I can get a cryptocurrency for free and blah, 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 they're like, I'm gonna sign up, I'm gonna push that button. And within a week or two, they completely forget about it, or they don't care about it anymore, and they don't see it through. And that's the main reason why, even if I'm curious, like I'm doing my best to share what I know about Elliott Waves in this video and to provide you with the resources to make things easier, so things that I had to really search to find, like that fucking cheat sheet for Elliott Wave, yeah. But I'm curious how many people read the post, watch the video, and maybe are, oh my God, Elliott Waves is super cool, I'm gonna look it up now. And basically, then they start, they spend an hour or two, but then it becomes too hard, and then they stop, yeah? And instead of discussing Elliott Waves with somebody else or trying to read it again or so, they just give up, yeah? And because they see the next shiny object, they see the next stock that's about to explode where they can YOLO all their money with, I don't know, 5 times leverage or more, and then you see their loss porn, that they lost everything, yeah? It's like, in my honest opinion, I think everybody can be financially free. Everybody. Like, the reason why not everybody is financially free or achieves financial freedom, it really just comes down because people are too lazy. They don't really want it. They don't have a clear picture they don't have clear goals, so they're not willing to put in effort. Instead of reading a book, it's, I don't know, like watching a whole season of some TV show on Netflix, yeah? And personally, like for me, in my marriage, it was a little bit challenging. My wife used to be an employee at an IT company when I met her. Now she runs the business with me. And for her, it was some kind of change. But I made it very clear, like the option is to either sacrifice a little bit for 1, 2, 3, maybe 4 years, and then we have all the freedom in the world. Maybe we're not able to buy Ferraris and stuff like that, yeah. But we have the freedom to do what we want, when we want, and we can have okay vacations whenever we want, not when somebody else approves a vacation. And it's kind of like, yeah, and I forgot what I want to say, yeah? But damn, I'm getting old. But it was challenging for her to adapt to that, and that's what I wanted to say. It comes down to being willing to make sacrifices. Since 2019, I mean, there have been a handful of days where I did exactly nothing, but on average, I'm working 7 days per week. That scares some people away. But many of my days consist of, I just reply to some YouTube comments, I'm active on our community Discord, and I deal with a handful of emails. So basically, I work 20 or 30 minutes in the whole day and relax the rest of the day. Yeah? But still, every day I do a little bit that gets me closer to my goal, and most people just don't want to put in that effort, and that's why most people will always be poor or have average lives or whatever. If they're happy like that, it's okay. It's not my problem, not my life. But yeah, and again, that's also why Elliott Waves are not that popular. People cannot believe that there is something that's that accurate. Yeah. As a result, they don't bother to check if it could be, but they just say, no, it's not possible, because if it were so easy, everybody would do it. Yeah. Well, it's people's laziness, the only thing that's keeping them from financial freedom. The funny thing about that is, because they are lazy, so too lazy to, I don't know, like instead of watching Netflix or whatever, to spend an hour or two doing research about some theory or opportunity or whatever, as a result, they will end up working the next 40, 50 years, and some of them might have to work 2 jobs at once and so. And I don't know, I'm likely even lazier than all of those people, because I rather focus now and sacrifice now a little bit in terms of, like, if I want to buy something, I ask myself, do I really need that? Or can I use that money better? So for example, buying more stock, or I don't know, like we recently hired our first employee, or we spent, don't know, I think $2,000 to improve our studio setup here and so on. Yeah. So I rather make those sacrifices now so I can relax the rest of my life with way more cash flow than we have now and do whatever I want. Then I don't know, like then to chill and relax right now, but have to work the next 40 years, 50 years with no financial security. And I think that's what a lot of those things come down to, that it's about either you're willing to make the sacrifice for a short period of time. And to end that part, I also want to mention, my wife also was skeptical about the YouTube part. She decided to start a blog back in 2019, and then I reached monetization with my channel. She saw how much money we can make there. So she started her own YouTube channel in September last year, and so less than 6 months ago basically. And hers is in Russian, and a lot of the times she just takes topics that I recorded already that work well on my channel and records the same video in Russian. So she doesn't have to do a lot of research for many videos and so on. So it saves her a lot of time. But because she was able to avoid a lot of mistakes that I made with my YouTube channel, she reached YouTube partner in less than 6 months. So she's now at close to 2,000 subscribers on her channel and has the watch time requirement and already starts making money. Not a lot at the moment. Her channel brings around $5 to $10 per day. But again, it's kind of like semi-passive income, because she can record the videos when she wants. She doesn't require, or she doesn't have to work 40 hours per week to maintain that YouTube channel and so on. And the more videos she publishes and so on, the more views you collect every month. So basically your income keeps growing. So you don't have to ask somebody else for a raise. You can just publish more over time and your income will grow and grow. Yeah. But yeah, anyway. So that's the whole story about why I think Elliott Wave theory is not that popular. Yeah. I also don't know. I have acquaintances that I really want to see financially succeed, and I can share things with them. And even though I have a solid track record, yeah, and they just have the doubts. And then later when I'm showing them how much I made, then it's like they're happy for me, but I'm sure partially they also regret that they didn't listen. Yeah. And I'm sharing with them how much I made, not just because I want to show off or something, but because I want to enforce them, like maybe next time you listen. Maybe next time you follow my advice and you also make a step forward towards financial freedom. But yeah, some people you just can't help. When do you see GameStop starting upwards momentum? Where does it end currently in your opinion? I have no idea. I honestly, like, that's one part. Like there are things like I saw it earlier today flipping through the book. Let's see if I can find it real quick. No, not here. Maybe I find it. There we have one. Yeah. So what do we have here? 16, 16, 16, yeah. Like, so there are ways how you can predict how long things take, and there it's 45 or 46 years and splitting up the waves accordingly. So how you could predict how many candles it will likely take till we see the next wave. But with all the manipulation going on, I think there is, like, I don't know, like I don't think that those things apply right now, the timely restrictions. Because if we would believe the timely restrictions, and maybe they're right, if we go back to our, not to this chart here, there I have a little more labeled. Or maybe I don't have everything labeled here. Let's see. Yeah, so if we believe that, and that wave 2 here is labeled wrong, obviously, but if we believe that, we would talk about, what's that here? Is it still the same year? I would actually be just a few days from now, 28th, yeah. But honestly, like, don't take the timely restraints here for granted or focus on those days. It's like, obviously, short sellers will do whatever they can to spread fear, get people to sell and make it look like there will be no short squeeze and so on and blah, blah, blah. And yeah, like, and they will do so especially on the dates where people would expect it, yeah. So first it was like, okay, it's gonna happen on the 19th because it's gonna be quad witching day or quadruple witching day or whatever. And what did we have on the 19th? Yeah, like we had a green candle here where we're looking at, we're looking at the 4-hour chart now, yeah. But overall it was like not such a great day, yeah. And now it was like, okay, with the earnings call, yeah, and what do we have after the earnings call? Badum, yeah. And it's not even that the earnings call was bad. Yes, their overall sales have been declining, and they have been declining already for the last, I don't know what many earnings calls or quarterly reports, yeah. But we are having a pandemic, especially in the US. A lot of people, the average, if you think about the average customer of GameStop, it's not some person that has a high-paying job. Like, it's a lot of, in my opinion, a lot of teenagers and a lot of, talking again about lazy people that rather play 60 hours of some game instead of doing some research how they can be rich in 2 years or 3 years or 5 years or 10 years, yeah. And a lot of those people have been financially struggling because of COVID and the small help that the US government provided. So having like a lower revenue or overall revenue during a pandemic, it's like something I wouldn't care about the least. But obviously hedge funds and shills focus on that aspect. Like, it's another quarter with lower results, blah, blah, blah. When the important numbers or the important things are, in my opinion, it looks like they sold something like a corporate jet or so. It was like in the earnings call mentioned, like something with travel asset. So they were willing to get rid of something expensive, likely a jet, I guess, because they don't need it and it brings cash. They took care of paying back some of their debt already. Their e-commerce sales are increasing, and that's the biggest or most important number, and they are increasing a lot. And they still kept closing stores, so to basically increase the profitability of each store, while at the same time, usually we could worry now about like, oh my God, they're gonna close all their stores and become an online-only company and all the employees will lose their jobs and blah, blah, blah. At the same time, however, they use all those stores as fulfillment hubs, which means those jobs are fairly secure. So it's kind of like an interesting positive aspect of the whole thing. And yeah, so overall, the earnings call was good. The numbers drop. Why do the numbers drop? Because it's the best possible moment for short sellers to try to manipulate, because everybody was like, oh my God, we're going to have the earnings call and blah, blah, blah. And if you then run around and you spread, oh my God, again, bad quarterly numbers, sell, yeah. There are enough idiots in quote, or people that just, yeah, it's those get rich quick people that just want to make quick money, are not willing to do any kind of research, and so they end up buying, and they may even end up buying on credit or with money they cannot afford to lose, and then they start panicking when it drops for a day. On my main, so I have another eToro account, and that is a popular investors account, so I cannot just YOLO, and I have to stay within risk scores and blah, blah, blah. And basically in there, I had my GameStop positions. And you see it's a small account, so it's like, it's not super big. Started it last year in May. And those GameStop positions are here, we have them, yeah. So I bought around 38 to 40, bought a little bit more here, blah, blah, blah. And at some point set my trailing stop losses, but they paid off hugely, and they basically resulted in 66% performance in January. It's mostly GameStop, but I was forced to also close them because my risk score went up, and so people couldn't copy me anymore, and blah, 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 and so on. And then I had one guy who also copies me and asked about my prediction for GameStop, and I told him, first of all, not financial advice, just my opinion, blah, blah, blah. And I told him where I think this is going, and I don't know with how much money he copied me, but he basically then took 9 times that amount and deposited that and bought only GameStop at around 180 and sold most of it below 100 then, because he couldn't handle, like, although I mentioned that we might see drops and all of that, but he was just greedy, yeah, and basically just wanted to have the big payoff. And I just held my position, so already closed it, but let's go back. So again, I had to close my positions because of the risk score, and I anyway would have in that case to take profit, because again, here it's not just my money, but, oh yeah, there. So basically I bought that at 140 on 28th, yeah, and I'm just holding that position, no matter, like I could have sold it a couple days ago with 100% profit, but I don't, because I know it's not the tip yet. Yeah? And that's again a very small position, blah, 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 and so on. But it's like, I don't know, it comes down like the moment you understand that money isn't important, that it's not about getting rich tomorrow, but about like having a clear goal. Okay, I want to have that amount of money, or I want to have that amount of monthly income at some specific point, and really wanting it, like to the point where you're willing, if you have the choice between reading this book or doing whatever else you can to improve your cash flow or your income or your winnings. So if you have the choice between going to a party with a lot of hot girls that are willing and using the time to get closer to achieving your goal, that it's an easy decision for you to say no to the party. Yeah? And if you're willing to make those sacrifices for a certain period of time, again, maybe it's 1 year, maybe it's 5 years, doesn't really matter, then you will reach the point where you reach all your goals, where you're financially free, where you can do whatever you want, and then you can party whatever you want. Obviously, that comes with the risk that what if you die along the way? Well, you can still make sure that you enjoy from time to time in between, yeah. But yeah, like if you don't make sacrifices, you just don't get. It's like, I think the best saying for that is like, if you want something you've never had before, you've got to do something that you've never done before. Yeah? And if you just do the same thing that you did the last 10 years or 5 years or so that didn't make you rich, like the same daily routines and so on, well then maintaining those daily routines will not get you to become rich. Yeah? Okay, like so, what do we have? Thanks for this information. Could you go over your price target? Oh yeah, price target this week, yeah. Yeah, the weekly target that's the problem, like, because I don't trust the timely restrictions. Like we may have a sideways movement here. So yeah, that wave is obviously wrong because that's an ABC and there's no thing starting here. Don't panic. Or it should be wrong, because if we again use our cheat sheet, wave B can be an impulse or an ending diagonal. So it could actually apply, which would be interesting, yeah. But very unlikely, because our wave 1 and our C target are here. So it's more likely that we can fit our 1, 2, 3, 4, 5, this one here, like this 1, which predicts our 2, and then our 3, let's project it forward. 3 would be here, with our 4 here, and our 5 would then be, where's our 5? Okay, I somehow get it mixed. Okay, 5, 4. Yeah, something like this. Yeah. But yeah, so with the timely part, it's like challenging because of the manipulation and because hedge funds know which dates most people are focused on, and those are the days where they will do the most or whatever they can do to make things look negative, so that enough people are like, oh my God, it will not happen. It didn't happen on the 19th. It did not happen on the earnings call. it's never going to happen and that people give up. Yeah? That's like Warren Buffett said, the stock market is an instrument to transfer money from the impatient to the patient, and that's exactly what it is. If you believe in the company long term, if you believe in the numbers regarding the short squeeze and so on, then everything else doesn't matter. Like everything else then is just, okay, I'm just waiting for it. If you watch what's the movie called, Margin Call or The Big Short, where they talk about the housing, or show the Big Short from the housing crisis, they waited, I think, 2 years. So, and at the end, their short position was like, or they actually shorted the buy bond, or the bundled credit swaps, whatever it was called. And they did it for $1 billion, if I'm not mistaken. Yeah? And they also knew, like, their numbers didn't change, so the result doesn't change. It just means, the question is just how long you have to wait to get there. Yeah? And that's very often the only question that matters, and where patience is key. That's why it's so important that you don't invest or trade or gamble with money that you cannot afford to lose. And I've done that. I also, like, from when I was around 20, I made my living for roughly 10 months by just playing Pot Limit Omaha, so basically poker. And before that, when I started playing poker for the first few months, I actually lost a ton of money, and at some point I was very close to being, or having a gambling addiction. So like losing money that I would need tomorrow to pay rent, and then lying about my losses, only bragging about my winnings and so on. And when you do that, it's the same with trading. If you like risk money that you cannot afford to lose, you make stupid mistakes because you cannot wait till, I don't know, you may not be able to wait 3 months for it to happen, and you might be forced to sell at a loss. So rather make smaller positions, but with money you can afford to lose, theoretically, so at least, or where it doesn't matter if it happens tomorrow or in a year from now. Yeah? And yeah, I think that's one of the most important lessons. Like, I think for me personally, like one of the things that matters to me most is like my personal happiness, my personal well-being, which means I want to sleep well, I don't want to worry, and I just want to be happy. And for that, if I were to, I could take, I don't know, like my pile of credit cards and max them all out on GameStop. And once we have a squeeze and I'm able to sell for 10 or 100,000 or $1 million per share, doesn't matter, I will probably partially regret that I didn't do it. But I know why I don't do it, because if I would invest money right now that we need to pay salaries for our first employee that we hired, yeah, or our rent or anything else, I would have a timely pressure. So suddenly I'm basically in the same situations like the short sellers that try to kick the can down the road, and I would be in the same situation because I would need to see it happen. Yeah, but because I only invest the money, like, since I don't have a salary that comes in every month, but we have revenue that comes in every day. So I'm basically every day looking at the numbers. I know how much things we have to pay and so on. And I'm running the numbers, and every time I see there's another 1,000 that I don't need for the next couple of months, and there are no other investments planned for, like, I don't know, upgrading the studio further or something else, then I'd consider, do I want to put it in GameStop or do I want to put it in some other investment? And then I do it. And if the stock goes down, I don't care. I really don't care. It's like, sure, I would wish for it to shoot up right now and make me a millionaire or multimillionaire, but I couldn't care less. Like, if it happens today, it's fine. If it happens in a week from now, it's fine. If it happens in a year from now, it's fine. I know, based on the numbers that I have and Elliott Waves, that it will happen. That's my opinion, not financial advice. And yeah, so don't focus on any dates. Invest the money. So if you believe that what I'm telling, if you agree with what I'm sharing here and all the legal blah blah, because that's just my opinion, not financial advice, then just invest whatever you can spare that you don't need necessarily. Consider making sacrifices. Like, again, like I mentioned before, if you really want something, you'll find a way and you're willing to make sacrifices. Like the, I don't know, $10 Netflix subscription. If your broker allows you to buy partial or fractional shares, well, $10 also gets you a fraction of a share. Yeah, your, I don't know, like Apple TV, Hulu, and whatever else or other service or subscription you have. Ask yourself, do you really need that? And consider how much money you spent in a year on that service, and then ask yourself, maybe if you don't use that service for a year or two, but you invest that money, maybe not in GameStop, maybe long-term in something else, doesn't really matter, but it will get you faster to becoming financially free, and then you can spend all the money you want on subscriptions. Yeah? but that's just me. Like, I'm willing to make certain sacrifices most people are not willing to. And yeah, so welcome A. I'm starting to lose my voice here, so we're not going to go on that much longer, I guess. And let's see if we have any questions that we didn't cover. So no, looks like about it. I'll probably again, so gonna make a quick recap here. Initially, so if you're just tuning in, you can basically go back to the beginning and you can skim through the video. There's a part where we look at Tesla to show how Elliott waves work, how accurate the predictions are that I'm making with Elliott Waves. So we're looking at a couple of examples. Then we're looking at the GameStop monthly chart and map out where we are on the overall wave pattern since the IPO. And followed by looking at what's expected to happen now and so on. And followed by examples how you can use trend channels to quickly draw Elliott waves. So if you have no clue how else it works. And also resources in the description, so not only the main Elliott wave theory book that you can read for free online with one of the links or order the physical copy like I did, but also this magic PDF here that you can download that basically contains all the wave patterns with super detailed explanations. It might take you some time to figure out what all that means, but basically it's like the ultimate cheat sheet for Elliott waves. And we talked about the timely thing, so no idea when it will happen, tomorrow, in a week, in a month, in a year, don't care. We talked about if manipulation might screw with Elliott wave patterns and came to the conclusion, yes, it does when buying restrictions or other restrictions or interference exists that prevents the natural buy and sell flow of all the traders. Other than that, I think it doesn't matter, and we have enough examples that show that it doesn't matter. And yeah, and besides that, I think that's pretty much all we covered. A lot of like general advice in terms of, or general opinions from me, not advice, yeah, about why I think Elliott waves are not that widely spread, why I think many people or most people don't achieve financial freedom and so on. Maybe you agree, maybe you don't. And yeah, like I think, yeah, I'm definitely, oh yeah, the one thing that I also want to mention real quick, we talked about it earlier, is that, as mentioned, based on the post on Reddit, the dudes from ElliottWave.com actually reached out to me, and I'm currently communicating with them and trying to get like one of their main Elliott Wave analysts, Jeffrey something, so trying to get them to actually make a video and predict the patterns, so they have way more experience with Elliott waves and so on. And if they will do that, so I should hear back from them within a day or two, then I would just wait for their video and then make a post about that and link to the video, because they are obviously the Elliott wave gurus in my opinion. If they don't, I will likely find the time on Friday to write an updated post, or maybe on the weekend. But overall, my prediction stands like the way we covered it in the video, so I'm just going to put that in a post. And yeah, like unless something unforeseen happens, but the price would need to drop quite a lot for it to actually change the wave patterns. Yeah. And Charles asked if we covered truncated fifths and ending diagonals with automatic plotting, or if the wave basis incorporates that. That's a good question. I'm not sure it does. Yeah, but as mentioned, wave basis with the automatic plotting, it's something that saves you time, but you anyway should double check. Yeah, and I think truncated fifths may be a tricky thing, but then I guess it will just label wave 3 and wave 4 wrong so that it can get the wave 5th. Actually, it would likely label wave 5 or wave 3 as wave 5 and likely then consider the truncated fifth as the start of an ABC zigzag or so. So basically, what would happen is that you would have if we yeah, I don't have an example it's here. But basically it would label wave 3 as wave 5 and somehow screw up wave 1 and 2, yeah, to somehow fit a wave 3 in between. And then instead of a regular, if there would be a zigzag, for example, it would probably try to make it a double zigzag or so in the corrective phase. It's definitely not 100% accurate. So as mentioned, using wave bases, just hitting the button and then making the trades for whatever is predicted is not a perfect idea. I mean, one thing I want to point out with wave bases, I'm on their $50 plan because I use it to plot out what they think is right and then I control that and blah, blah, blah. But they also have higher plans where you would then get alternative patterns. So you would have a sidebar, which I'm hiding right now, where you would see like 2 or 3 different patterns that theoretically apply according to the algorithm. And often they are very similar and only 1 or 2, like maybe the 2 in one pattern is here and then the other one is like the next candle or so. And where you can then basically see what fits the most. But in the end, you will always have to manually double check based on the rules. But there, you could actually just use the cheat sheet. Yeah, I think the biggest issue is also that if you're tempted to just go here and say like, okay, like load the chart and push the button. Yeah. Now it's the smallest point it has on the chart is this candle here. So it would predict like this, and then people might go 1, 2. And yeah, locked it in. And would then say, oh my God, I can buy and it will go to 2085, yeah, which in this case is not far off from our prediction, when in fact the actual start of the wave isn't here, but it would be back in April at the low, yeah, and obviously that would screw things up. So that's why I always would also start with like the monthly chart, try to figure out since the IPO or since the since a recent high or low, so after a huge correction or rally, to start there. A good starting point for most stocks to start with the Elliott Waves is actually the low that you have in April last year. That's cool, yeah. So the low that we had based on COVID, end of March till actually end of March last year, is a good start for Elliott Waves. However, you have to consider if we do that, or if you do that, no matter if it's GameStop or anything else, yeah. Again, reminder, each wave is part of, or each full wave is part of another wave on a higher degree and contains waves on smaller degrees, yeah. And if we do that and it eventually happens, then you have to consider, well, it would say here 0, 1, 2, that this is not the absolute zero because there is a bigger wave going on. So if we were to zoom out on the monthly chart, we would be able to, or we would need to figure out what's this point. Is this is this wave wave 1, a wave 3, or a wave 5? So we can actually think further ahead. Yeah. So the kind of like the biggest magnitude that wave basis gives you, especially if you start from the COVID low that we had last year, I wouldn't focus on that too much, but I would then focus on the smaller magnitude. So the waves that you can draw in between here from 0 to 1, there should be a 1, 2, 3, 4, 5, which again then contains multiple other 1, 2, 3, 4, 5s and corrections. And from 1 to 2, there should be a 1, 2, 3, 4, 5 for an ABC, or no, not a 1, 2, 3, 4, 5, an ABC or another corrective pattern. And if it's an ABC, then you can again use the cheat sheet and look up the ABC wave. The first wave should be an impulse or a leading diagonal. The second one can be any kind of corrective pattern. The third one should be an impulse or an ending diagonal and so on. Yeah. But yeah, so Millerization says, I started using wave bases as a free trial for 14 days. Yesterday I set up some alarms on the app's predictions. Shit, I hit like 3/4 of it. Yeah, like one thing to keep in mind is, like if you're new to all this and wave bases, when you see a question mark next to a wave, it means that it's not confirmed yet. So it's like, it could be theoretically like this wave 1 here is not confirmed. So theoretically it could be that the price goes up, blah, 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 and that then eventually it ends up that wave 1 goes till up here. And the same if we look at this B here, it's not confirmed yet. It could be that the price goes like this, blah, blah, blah. I mean, for that pattern, actually not, but it could be that there's another kind of development that changes this ABC prediction to, I don't know, a double zigzag or something else. So whenever there's a question mark, keep in mind that it's kind of like a guess. Okay, it looks like we have this pattern right now. And then it's up to you to apply the things you learned from the Elliott Wave book or use the cheat sheet to confirm what's actually going on. Yeah? And even when you have a pattern, like again, on the 4-hour chart, it works a little better, but on the hourly chart, we had that nice mistake. Yeah, so if we predict from here, that would be another mistake. Yeah, so I'm just opening the chart on the hourly chart, and we let it predict, and then we would see 1, 2, and if we project the pattern forward, I cannot project it forward from here, yeah. But theoretically, we would see 1, 2, and then the logical conclusion would be wave number 3 is the longest wave that goes down. But the only reason why we have that 0, 1, 2 is because we started from here and we didn't consider which wave we're on the bigger scale. Yeah? However, the point that I actually wanted to show is, again, the reminder from here to here, so from this low point up here, it basically predicts an ABC for some reason and has a 1, 2, 3, 4, 5 in here. That doesn't make sense. So like you have to double check the things that wave basis plots on the chart. But it's a great help to give you already a great idea. And a useful thing here, in case you haven't noticed, when you right click, you can change the wave degree. Yeah, so the biggest wave that you have, so if you look on the monthly chart and you draw the biggest 1 or 1, 2, 3 that you can find, would be, for example, the super millennium. Yeah? And then if you then try to, or if we say this one here is a cycle wave, which means if we then try to fit in the wave from here to here, it would be whatever the next smallest degree is, it would be a primary wave. Yeah? And if you use those color settings correct, it will also order the waves or the labels properly, so you know that's the biggest wave, that's the next smaller degree, that's the next smaller degree, and so on. Yeah. So yeah, but with that, I think we're going to end it for today. Still have some other things to do. Thanks for tuning in, everyone. Yeah, like probably, as said, either Elliott Wave or ElliottWave.com will make a video about their prediction, and I will summarize it and share it on Reddit, or I will write an updated post by the end of the week. Yeah, if you still believe in GameStop, don't worry about the time frames, just worry about yeah, good opportunities to buy more. Personally, I think that right now with the current, yeah, now we screwed up the predictions that we had, but in the current area, maybe it goes to 130, maybe it goes a little lower, but I think that in this area, it's kind of like the last chance to buy cheap, in my opinion. It's not financial advice, could fall to 0 for all I know. But I think right now is the last chance to get in really, really cheap. Although once we see a squeeze or over the next months or even years, I still think it's a solid investment. So yeah, with that, thanks for tuning in. It's really been nice to get some questions, also things I didn't think about. And I will try to also use that questions if or when I write an updated post during or till Sunday. To share it with the rest of the Reddit community. So yeah, thanks for watching. See you soon. And I'm going to push that button and then I'm going to be gone. Bye-bye.